Welcome everybody, Doug McKay, antiwallstreetguy.com on July 1st, 2011. Let's focus today on a chart of the S&P cash. This is a daily chart of the SPX, and obviously a very big move this week, especially in the Dow. I think over 600 points. But you can see we had a similar move down for a period of basically a week, maybe 6 trading days not too long ago. So we expected a bounce here, if nothing else up to 1300, 1320, 1340, that level. This was stated in a post that we put out on 6/21. Target is 1320 to 1340. The bottom line right now is after I think 7 or 8 weeks, we have the overall trend right now as long as up. However, that is cautiously long, and the reason for that is because we still have the possibility of putting in a bearish head and shoulders pattern basically until we probably get above these highs that we put in during the head fake, the one-day reversal back on the 1st of June. Those highs were right here at 1345. Now, one of the reasons I like this potentially as a breakout to either challenge or break the new highs is a inside Elliott wave pattern, patterns inside of patterns. We potentially have a 1, 2, 3, 4, 5. 1 would be the top here, 2 would be the corrective wave, 3 is always the larger wave. We don't know when this will end. 4 would be sideways and or fading. And then if we were to break up above wave 3, wherever that may be, that would put us basically in high probability for a wave 5 up, which would take us more than likely beyond the high that was put in back in late April, early May. As of yesterday, you guys know that I follow Investors Business Daily. As of yesterday, Thursday, they still had the market in correction, mostly due to volume. I don't know what their outlook is today. That will be out probably in 60 to 90 minutes. We'll see. I guess what I'm getting at is I do like this pattern here, but the possibility obviously still exists where this is just a bounce inside a bearish pattern. Therefore, I think it would be prudent to kind of add a little bit at a time here. If it all blows apart, we will get out and then look to raise cash and do a little bit on the short side. So you'll see that on the blog at antiwallstreetguy.com. We still haven't had a decent correction yet. I still think we're going to see 1200, 1190-ish, 1228 sometime in 2011, as I said yesterday, and basically throughout the year. That's not to say that we won't see 1400 first. Let's take a look at, I cannot with freestockcharts.com put on Bollinger Bands, but let's go to big charts here. And what I did is I pulled up a chart of the S&P. We closed again today just under 1340 on the cash. If you guys are familiar with Bollinger Bands, you really don't trade above or below a Bollinger Band for more than a day or two, maybe 3 at the most. So that's why I anticipate, as I said yesterday on the chart of the day, some type of fade pullback, hopefully into a 4th wave sometime next week, Tuesday or Wednesday of next week. We should see some selling going on. Above 1350 though looks very, very good. All right, you guys, let's talk about gold. I'm going to flip over here to a futures chart on gold. Down 15 today. What I basically am looking at for our purposes, excuse me, on the managed side is if we were to get a close above 1550, that would be a breakout. This was kind of a head fake back here. Failed breakout, if you will, for a day. We have support at 1500. We're down through that now. The next area of support would be 1450. I would only be a buyer if we get out above 1550 or play a bounce at 1400. Anything in between for me is just too much noise and too much of a headache. All right, so going back to the chart here on Free Stock Charts, the overall trend right now is up, cautiously long. We'll have stops in place. Maybe we're looking at a 1, 2, 3, 4, 5. We'll see you next week. Happy holidays.